Update. Check. Testing. Okay, it works. Streaming. And Zoom is live. Okay, have fun. So, okay.
Start already, right? Hi, everyone. Hi, welcome back to another Monday Weekly Forecast. So we're just going to give a couple more minutes to let more people join the session. So in the meantime, you can just make yourselves comfortable and we'll start in a couple of minutes. Hi, welcome. We're going to be starting in a couple of minutes. So in the meantime, you can just grab yourself a drink. We'll start in about maybe like 2 minutes. We're just waiting for more people to join. In the meantime, if you have any questions or any requests for any charts you want us to go through, feel free to type it out in the chat. Okay, it's currently 5:05. I think we can begin now. So, hi everyone, happy Monday. Welcome to our Monday weekly forecast as we talk about the key fundamental news events to expect for the week ahead, along with their technical setups. So we'll be highlighting key news events, central bank notes, and key support and resistance levels to watch out for. So anyway, disclaimer as usual, this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. Okay, so over here, we have our team that will take you through your webinars. We have Desmond, who's our CEO and Chief Trader, along with Cassandra, myself, Jianing, and Joanne. So over here for today's webinar, I will be co-hosting with Jianing.
Hello everyone, Jianing here.
So we'll be splitting up the fundamentals and going through the charts together with you. So if you have any questions throughout the webinar, feel free to send them through right away and we will answer them as soon as possible. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We're an award-winning research firm and finalists in 2019, 2020, and 2021 for Best FX and Equity Research. We work with the major financial institutions to help them forecast where the markets are heading, and now have a special partnership with Vantage Markets where we're bringing you guys the good stuff every day. Okay, so now without further ado, let's begin. So what happened? What happened across the Asia session? So the DXY continued trading in a consolidation with most currencies retracing following the overnight volatility. So what does this mean for the Europe and US sessions? Look for potential resumption of the trend as the European and US sessions open. Beware of the possibility of higher volatility as investors close positions into the weekend. Okay, so let's start with our first currency. We have the dollar index. So for our dollar index, there were no major news events for today. And what can we expect from DXY today? On Friday, US services PMI data was released at 47.0 instead of a forecasted 52.6, which took the services industry into the contractionary phase for the first time in 2 years. This brought significant weakness to the DXY, trading down from the 107 resistance area to test the 106 support level. Currently trading at 106.5, anticipate further short-term weakness in the DXY as markets digest the PMI data from last week, with the DXY likely to test the 106 price level again. For central bank notes, forecasting 75 basis points hike at the next meeting, which will be on 26 July. Balance sheet reduction plan to continue at 60 billion in treasuries and 35 billion in MBS over a 3-month time frame. So for our next 24 hours bias is weak bearish. So now let's take a look at our DXY charts. Okay, so to save some time, we've already plotted our charts. So over here is our DXY on the 4-hour time frame. We can see that there is a general uptrend for the DXY. So once we've determined the general trend, we can plot our support resistance levels. So our buy entry is over here. It's a pullback support in line with 2 multiple swing highs, which is a key level. So this level is also in line with the 61.8% Fibonacci projection and 61.8% Fibonacci retracement. So for our take profit over here, let me just zoom out a little bit. Okay, so for our take profit, it's also a overlap resistance in line with the 50% Fibonacci retracement. Let me just check to see if we have any questions so far. Okay, no questions. So yeah. So for our indicators, after we've settled our Fibonacci levels as well as our support and resistance levels, will be to pull out some indicators. So first line, we normally like to use the Ichimoku, but as you can see over here, our Ichimoku is bearish. So it doesn't support our bullish bias, so we can remove that. So originally, we wanted to use our MACD, because you can see a bullish momentum over here. But currently we can see that there is a little bit of a bearish momentum. So we might not be able to use this in the long run, but for now, it's rather insignificant. So we can keep our MACD. Okay. Any questions? If not, let's continue with our next fundamental. Okay, so now we have the Japanese yen. So there were no major news events for today, and what can we expect? So the Japanese yen moved lower strongly as it broke the 137.5 level to reach 136.0. As investors feared an economic slowdown in the US following the weaker PMI data, the Japanese yen was heavily bought and it was considered a safe haven alternative. Volatility in the dollar yen is anticipated to be high, while price is likely to continue trading along the support area with possible spikes toward the downside. Look for the 136 level to form strong support and for the dollar yen to climb towards and beyond 137 in the longer term. For our central bank notes, kept all policy settings unchanged at the June meeting, reiterated that rates will stay low for the foreseeable future and won't hesitate to add stimulus if the economy needs it. The next 24 hours bias is weak bearish. Okay, let's take a look at our dollar yen charts. Okay, so here's our dollar yen charts. Our general trend is uptrend, but we can see over here that price has recently broken our ascending trend line. So we can expect price to continue to drop from our sell entry over here. So our sell entry is actually in line with 2 swing highs, 1 swing low, which makes it a key level because it's a overlap support. So since price has broken this level, we have downside confirmation that price will continue to drop to our take profit, which is in line with this swing low here, as well as a 61.8% Fibonacci retracement over here. And for our stop loss, we place it, we just want to highlight this level over here, which is also a overlap resistance in line with the 61.8% Fibonacci retracement. Sorry. Yeah, over here. So to support our analysis, we can see the Ichimoku. Price is moving below the Ichimoku cloud, which gives us a bearish momentum. Okay. Are there any questions so far? If not, we can continue with our next fundamental, which is gold. Okay. So for our gold fundamentals, there were no key news events, and what can we expect from gold today? As major markets released weaker than expected PMI data, ringing alarm bells for further economic slowdown and increasing the risk of an unavoidable global recession, investors shift their attention toward gold as a safe haven alternative. Gold found the 1680 level as a key support level, and corrected strongly to the upside, reaching the resistance area of 1731. Look for gold to complete its retrace at the 1720 level to test the resistance area again. If price is able to break above 1740, further upside to 1770 could be anticipated. Our next 24 hours bias is medium bullish. Okay. So now let's take a look at our gold charts. Okay. Here we can see that gold has had a general downtrend, currently moving in a descending trend channel. Okay. So now that we have that, we can take a look at our support and resistance lines. So over here, our entry is in line with two significant swing highs. And we expect price to drop to our first support at the swing low, in line with the 100% Fibonacci projection. For our stop loss, we've identified this level over here, in line with the swing low, and the 50% Fibonacci retracement. As well as over here, we have a 161.8% Fibonacci extension. So let's take a look at our indicators. On the Ichimoku cloud, price is moving above the Ichimoku cloud. It's kind of bouncing off the cloud, so it doesn't support our bearish bias. So we can remove that. But if we take a look at our RSI, price has been moving in a descending trend line since this area in price. So it supports our bearish bias. Okay. Any questions? Okay, if not, we can continue with our next currency, which is the euro dollar. Okay, so there were no major news events for euro dollar, and what can we expect from euro dollar today? On Friday, the Eurozone manufacturing and services PMI data were released and signaled a slowdown in economic activity. This caused significant volatility in the euro dollar as price spiked around the 1.02 price level. As markets look towards the US Federal Reserve rate decision to be released on Thursday, it is anticipated that the euro dollar could continue to consolidate within the current price range of 1.016 and 1.025. For our central bank notes, raised rate by 50 basis points, and next meeting will be on 8th of September. Next 24 hours, bias is weak bullish. Okay, let's take a look at our euro dollar charts. Okay, so we can see a general downtrend for our euro dollar, but price has recently broken out of our descending trend channel, which gives us a bullish bias that price could continue to rise. So for our entry, I've placed it at this level because price has retraced this level and tested this level many times in the past. You can see price testing this level. So I've placed my entry over here at our pullback support. So if I'll take profit, I've placed it over here in line with two significant swing lows. So this is our pullback resistance. And it's also in line with our 61.8% Fibonacci retracement from this level to this level. But I will only go in for the buy once price has broken this intermediate resistance over here. Because if price breaks this level over here, in line with the 50% Fibonacci retracement, then we have upside confirmation that price could continue to rise towards our take profit. Because this is a significant level. Price has tested this level many times and it's struggling to break this resistance. So we're only going for the buy if price breaks this level. Okay, so to support our analysis, we look at Ichimoku. We always use Ichimoku first because at one glance, you know whether it is giving you a bullish signal or a bearish signal. So since price is moving above the Ichimoku cloud, it supports our bearish bias. Okay, let's continue with our next currency, Swiss franc. So what happened with our Swiss franc for today? Although there was no major news, we can expect the dollar franc. Since the dollar franc broke the support level of 0.9660 to reach the key support level of 0.96, the downward move was, however, quickly reversed as the DXY rebounded from the support level. With no major news events for the franc or the US dollar today, the dollar franc could continue to the upside toward the 0.97 resistance level. For central bank notes, surprise rate hike by 50 basis points to negative 0.25%, and the next meeting will be on 22nd September. Our next 24 hours bias is medium bearish. Okay, let's take a look at our dollar franc charts now. Let me just open my charts. Okay, no worries. We'll just analyze this together on the spot now. So we can see there is a general uptrend for our dollar franc chart. We have two double tops over here, one here and one here. So can you guys identify any any trend lines or any trend channels in this chart? You can just let me know in the chat. Okay, someone said there is a descending trend channel. You are absolutely right. So I'm going to draw that in over here. So what makes a valid trend channel? And there is two significant swing highs and two significant swing lows over here. Okay, so now let's plot our support and resistance levels. Okay, so for my first support, I think I would place it over here. Okay, and then for my second support, I would place it at the swing low over here. Okay, for my first resistance, I can see, let me just get rid of this. So I can see over here that there is an overlap with this swing high and this swing low. So this is a key level. And maybe I can place one more over here. And I'm placing over here because this is also a swing high. So it's a significant level as well. Okay. Okay, now let's move on to our Fibonacci levels to support our analysis. So what I typically like to do is to display all of the Fib levels so that we can see which ones line up. So over here, I can see my 78.6 lines up with our first, let me label this, with our first support. Okay. So I'm going to remove everything else and just display this. So next we have another retracement. All fibs. Okay, so can you guys see my 50% lines up with my second resistance? Let me just label. Okay. So we can see over here, my 50% lines up. Let me just see if my 23% lines up as well. Okay, yes. Here we go. Okay. So because it's moving in a descending trend channel, we have a bearish bias that price will continue to drop. To this level. Okay. So now let's take out some indicators. Ichimoku. Okay, we can see price is moving below my Ichimoku cloud, so it supports my bearish bias. Let's try RSI. Okay, similarly, we can see RSI. There is a descending trend line. So this definitely does support our bearish bias. Okay. Okay, but before we think it's going to drop to this level over here, it must pass through this first support. Once we have downside confirmation after it breaks this support structure, then we can go in for a sell, at this level over here. Okay. Okay, now I'll pass on the time to Jianing to continue going through the other currencies with you guys. Okay.
Hi everyone, it's Jenny here. So this is my first time to join this webinar. So very nice to meet all of you guys here. Okay, now let's begin our next currency analysis, which is GBP. So as there is no very key new major news here, we can expect something happen to GBP today. The GBPUSD found significantly upside. The BOE government's belly indicates that the possibility for more aggressive rate increase of 50 BPS at the coming meeting. The GBPUSD peaked to test the resistance area of 1.2050 before reversing sharply. The GBPUS is likely to continue trading between the range of 1.1970 and 1.2050. So there are also some central bank notes. The first one is interest rate currently at 1.25% with possibility for 15 BPS rate hiking to come. And the second one is peak inflation reversed to more than 10%, leading to the stagflation fears, possible GBP contraction in 2023. And the third one is quantitatively tightening plans to be updated at the August meeting. And then and the next meeting for August 2022. So for our next 24 hours bias is weak bullish. Okay, that's all for our fundamental and news for GBP. Now let's move on to our chart analysis. Here. Okay. Okay. Okay, let's make remove this one first. Okay, now we have a look at the firstly is we try to find the trend line or the channel for the chart. So you can have a look here. We have a bullish channel here. So price going from here to here. So we can expect the price may going up in the future. So now the second step is we try to find our buy entry and where can we take profit and where can we stop loss. So let me so in this case, for me, I want to put my buy entry here. Can have a look here. Because here you can see the price is testing here, and here is our swing low. So we can see we can put our buy entry here, and for the take profit, which is our resistance, we can see the price may go from here to here because we can see here is several swing low. So we can show you the first one here, and the second one here, and the third one is here. Okay, so here we can see here three swing high, and also we can see here we can find our Fibonacci retracement. We can use our Fibonacci retracement, which is 61.8 Fibonacci retracement here. So it can confirm our take profit line here. And alternatively, the price may go down to our support line. So I put the support line here because here you can see here is a significant swing low here, and also here is a significant swing low. So I put the stop loss here, and this is our support line here. Okay, so now this is our analysis of the GBPUSD. Okay, if you have any questions, please let me know. Okay, now let's move on to our next currency analysis. Sorry. Okay. Now it's Australia dollar. Give me a couple of minutes. Okay. Okay, now let me share you some news of the Australia dollar. So here is no major news here, but we can expect something from Australia dollar today with the recent weakness of the DXY and growing hawkish sentiment for the AUD as market anticipate future interest rate increase. The AUDUSD climbed to reach the 0.6960 resistance area. However, the price retraced strongly from the resistance to the current level of 0.6910. look for the AUDUSD to trade higher, testing the 0.6960 resistance area against before more sustained move to the downside if the DXY recovers strongly from the 106 support level. So here are also some central bank news. The first one is the possible 25 to 50 BPs rate hike. And the second one is a meeting on we can expect a meeting on the 2 August 2022. So for the next 24 hours buyers, we will have the weak bullish buyers. So that's all for what I'd like to share for the Australia dollar. Now let's move on to the chart analysis. Okay, now let's have a look of our AUD US dollar USD chart. So the first step is as well, we try to find where is our China with our trend. And so in this case, we can have a look at the price go down from here to here. So yeah, we can have, so in this case, we draw a bearish channel here. However, okay, let me remove this line. Okay, never mind, we can leave it here. So like as we can see here is bearish channel, but you can see here the price break the bearish channel and and going along the ascending trend line. So we can expect the price may go up in the future. Sorry. So next step is we try to find our support line and our resistance line. So in this case, for me, I like to put my support line here, because you can see here is the price is testing here, here, and here. Yeah, so the tree touch here, and so I like to put my support line here, and as here is going with the ascending trend line, so I think the price may go up in the future. So we try to find our resistance line. So I put my resistance line here, because you can see here is our here is the swing high. And also we use the Fibonacci retracement to confirm our idea of whether I can put the resistance line here. So you can have a look. Here is our Fibonacci retracement, and you can see here is the 78.6 Fibonacci retracement. So that will help us to confirm our idea that here could be our resistance level. And alternatively, the price may go down to our second support. So I put my second support here, because I can see here is a touch, here is a swing low here, and also here is a swing low. So we can see the price may go down to this support level. So next step is we try to use some indicators to confirm of our idea. Okay, so we use the Ichimoku cloud. So you can see here the price is going above the Ichimoku cloud here. So it can help us to confirm our idea that the price may go up in the future. Okay, here is our analysis for the AUD USD. So as well, if you have any questions, please let me know. Okay, let me check if there any question here. Right. Okay, so okay. Okay, now let's move on to our our next analysis is the Kiwi dollar. Okay. As usual, let me share you some news for the Kiwi dollar today. So here is no major event, but here are something we can expect today. The NZDUSD climbed higher through Friday's trading session due to the weakness in the DXY. Price reached 0.63 before retracing sharply to end the session at the 0.62335 support area. Look for the price to stage a brief rebound from the support level to test 0.6270 before possible resuming back into the long-term downtrend. So here are also some central bank news. The first one is the current cash rate stands at 2.5% following a 50 BPS rate hike in the July meeting. And the second one is expect near-term inflation to rise with lower economic activity. And the second one is the next meeting on the August 17, 2022. So maybe there are news we can expect then. So for the next 24-hour buyers, we will put a weak bullish bias. So that's all for the news of the Kiwi dollar I'd like to share with you. So now let's move on to our chart. Okay. Let me find our chart. Sorry, give me a couple of moments to find the chart. Where's the chart? This one. Okay, now here is our chart. Let me put it smaller to help you have an overall understanding of the chart. Okay, maybe I can leave it. Okay. Okay, now the first step is as well, we try to find our channel and the trend line. So in this case, we can see the price going from here to here. So here, so in the relatively long term, here is a descending channel, but however, as similar as last case, we can see the price break out the descending channel and going along as the ascending channel, ascending trend line. So we can have a bias that price may go up in the future. Yeah, so the next step is we try to find our support and resistance level. So in this case, okay, we put our first support here because we can see here is in line with our significant swing low here, and also here is touch here. So we put our and here is also a swing low here. So we put our first support here, and because we think the price may go down, go up in the next 24 hours, so we can try to find our resistance. So in this case, we try to find our we put our first resistance here because you can see here is a significant swing high here. And also because here we can see in this line the price is testing this line here. Yeah, so we can put an intermediate resistance here to help for our forecasting. But alternatively, the price may go down to our second support. So why I put the second support here? Because we can see the price is touching here, is testing this line, is going around this line. So we put our second support here. Now, okay, so the next step is we use our Fibonacci levels to support our analysis. So in this case, let me show you. Okay, so here you can see here is our Fibonacci retracement. So we can find a 68.6% Fibonacci retracement here, which is in line with our first resistance. So it can help us to support our lines here. And secondly is yes, we can see here is a Fibonacci retracement. Here is the 61.8 Fibonacci retracement level, and here is our okay, and here is our 100% Fibonacci projection level here. So because the price is going up here and going down here, so we can draw a Fibonacci projection here. Here is a low, and here is the first point, second point, and the third point here. Okay, so in this case, we put our intermediate line here, intermediate resistance line here. Okay, so that's all for our Kiwi dollar analysis. So if you have any questions, please let me know. Let me check it. Okay. Okay, now let's move on to our next currency analysis. Okay. Okay, the next one is our CAD dollar. So let me share with you some news of the CAD dollar. Okay, here is no major news today, but we can expect something happened for CAD today. So on Friday, USD CAD traded in consolidation below 1.29 as stronger than expected. Canada sales data offset the volatility from the DXY. With the short-term decline in energy price and the weakness in the DXY, the USD CAD is likely to trade lower. Look for price to break the 1.29 support level to signal further downside with the 1.2830 level as a possible price target. So for some central bank notes, the first one is increase rate by 100 BPS, taking interest rate to 2.5%, and indicated further rate increases likely. The next meeting will be on September 9th, 2022. So we can expect some news happen from here. So the next 24 hours bias will put a weak bullish bias for the CAD. So now let's move on to our chart analysis. Okay, let's find where is our chart. Never mind, we can do it, but we can do it together for our USD CAD. Okay, firstly is our first step. We try to find some trend line for all the channel for our currency. So in this case, we can put a channel. We can try to find a channel here. We need to adjust it to make it more okay. Adjust it a little bit. Okay, so for a valid channel, we need to have two touches for the top and the bottom. So we can see here is 1 and 2, and here is 1, and here is our second touch. So but in this case, we need to have we also have a look at the price is break the channel. So it's going, so here is bearish breakouts. So we put this channel to red instead of green. So I think you need to take a note of it. Okay, so the next step is we try to find our support and resistance. Okay, so firstly, I'd like to put my support line here. Okay, yeah, I need to change it into green. Okay, so I put my first support line support here because you can see here is our swing low here, and the price is testing in this area. So I put my first support here. So because we have a bearish bias, the price may go down. So let's try to find where the price may go to. I think in this case, let me zoom. Okay. Okay, I think in this case, I'd like to put my support here, second support here. Okay. Maybe a little bit lower here. So I think here I can put my second support. Okay, so the price may go from my first support, maybe you can move a little bit. Okay, from here to here, because here you can see here is another significant swing low. And now we try to find if the price go up, where can it go to? So I think in this case, the price may go up to the swing. Sorry, the price may go here. Here is our swing. Here is our swing high. Yes, I move it to here. Okay. Here could be our resistance, and because it touched here is a significant swing low. Here's our close swing high. And now let me adjust this line to the support, to the resistance. Okay, so you can have a look here. The price may drop from our first support to our second support, and alternatively, the price may go from our first support to our first resistance. Now let's use some Fibonacci tools to try to help us to make to make sure of our analysis. Yeah, so you can have a look here. So here is our 23.6 Fibonacci level, and here is in line with our first resistance. So maybe we can, so it can help us to confirm our idea of the first resistance. Okay, okay, that's all. And also we use our indicators at the Ichimoku level, Ichimoku cloud. We can see the price is going below the Ichimoku cloud, so it can help us to confirm our idea the price may go going down in the next 24 hours. Okay, I think that's all for our USD and CAD analysis. So if you have any questions, please let me know. Okay, because we are rushing, so we have another audio to analysis. Okay, now let's move to our another analysis. Okay, let's move to our crude oil. Okay, here's no major news for the oil, but we can expect something for the oil today as the DXY weakens the trade of weaker global demand for oil due to lower economic activity. Energy price may decline to test the near-term support level as Brent breaks the 104. Look for price to continue lower to test the next support of the 102 92.98. However, WTI currently trading at 96 might have limited downside with the next support level and 94. So for the next 24 hours buyers, we will have a weak bearish buyers for oil. So okay, now let's have a look of the chart. Okay, here is our. Okay, now let's have a look of our oil chart. So the first step is as well, we try to find our trend line here. So you can see as the price is going down, going up, going down, going up, going down, going up here, but it's still within the descending channel. So we'll have a bearish bias that the price may still stay within this channel. So now let's try to find our support level and resistance level. So I put my support level here because we can see here is our swing low. Yeah, our swing low here, and also it is and then we try to find our second support. So I put my second support here because you can see here is our previous significant swing low here, and the price is moving around here. Yeah, so we can expect the price may drop from our first support to our second support. Alternatively, the price may go up to our first resistance. I put our first resistance here because you can see the price is close to our swing high here. But if I if I put my lines longer, you can see we go from this level. So the price is going yeah, so here is our previous swing low here. Okay. So the next step is we try to find our Fibonacci retracement to confirm our idea of our support and retracement. So I put the Fibonacci retracement here, so you can see the 15% Fibonacci retracement is in line with our first support, and the 61.8 Fibonacci retracement is in line with our second support. So it can help us to confirm our first support and second support. Okay. Yeah, I think that all for our analysis of the oil. So if you have any other questions, we have 1 more minute, so maybe you can let me know, or maybe you can help it. We can discuss next time. Okay, this one. Okay, let me check the chat. Okay. So thanks, guys. Thanks for. Okay. Thanks everyone for attending our webinar today. So I'm looking forward to see you guys in next webinar. So have a nice night. Thank you.